Everybody, David Forsdyke here, head of the Later Life Finance team here at Knight Frank Finance. You join me here in the Knight Frank head office in Baker Street, London, and I'm joined by John Somerville, head of financial services at LIBF. John and I were on the original panel back in October when we first started talking about consumer duty. So what we're going to do today is have a bit of a recap, look at what should have happened by now and have a look at what is coming over the next 6 months before implementation. So let's start just by talking about what consumer, or reminding everybody what consumer duty actually is. John, can you give us a quick overview?
Yes, thanks for inviting me, David, and hello everybody. A quick overview really. We really want to see a high level of protection, consumer protection from this new regulation, and as part of that, firms really need to start considering the whole of the advice journey and how customers are protected from start to finish at every stage throughout that journey. So actually that brings me on a really good question for you, David. When we look back at the live events, you were telling everybody the huge amount of work that Knight Frank had already done in order to sort of cover off all of this new regulation and the progress that you'd made. So it'd be great to get an update of where you are now and what's coming up over the next few months. So over to you. Good
question, John. I think it's really important to start by saying that this is not a mammoth task in any way. I think firms need to look at consumer duty as something that can be fairly easily implemented. I think as an industry we're in pretty good shape already. I think I said that back in October. But what we've done here at Knight Frank Finance is we've once our implementation plan was all signed off at the end of October. What we've done is started to look at the customer journey, look at every step that the customer goes through with us, think about our communication with our customers, think about them in the context of the 4 outcomes under consumer duty, and really try and understand where we might be able to make some improvements. I guess you might call it a gap analysis, really, having a look at what the journey is for the customer and what we might need to do to change it, to improve it. What we've also done is we've set aside some time and some resources to actually implement those changes. And I think that's a really important thing for firms right now, is to, we've got 6 months to go before implementation. So it's really important that firms set aside some time, put aside some resources to implement the changes that need to be made. So John, what about you? Obviously you come at this from a very different angle to me. So what's your involvement in consumer duty been so far?
Yeah, well at LIBF as educators we have added all of the consumer duty text to all of our regulatory qualifications. So anybody who's a member of the LIBF can go back to all of that literature, all up to date. They can read about consumer duty, add it to their CPD. But also we've been producing a lot of webinars and podcasts for the industry. We've worked alongside many of the banks, building societies and financial advice networks talking about consumer duty, as well as people like WorkSmart, who are absolute experts. I mean, they helped with implementation of SM and CR across the industry, and now they've moved on to consumer duty as a big part of what they're looking at from the implementation point of view. And they've been keeping a lot of our members and students, and actually we have those, all of those webinars are free to access, so through our website people can come to those. But also, we've come to a lot of the webinars that everybody's been organising because we've got a lot to help people with, and I think as an industry we've all pulled together to help each other out to understand what's going on. I mean, for me personally, having been in the industry for a good 30 years, this is a really fundamentally good piece of work to move things forward. And actually, we've seen a lot of good things from the FCA in the last few months, and this should be applauded really for what it's trying to achieve and the spirit of it. I appreciate that it doesn't tick everybody's boxes, as far as what they want for their own businesses. Some people have found it challenging, but I think on the whole, I've seen the majority embrace the essence of what this is trying to achieve. And so really to help people understand it and implement it. And of course what we're trying to do as well is not create such urgency that people are starting to run around with their hands in the air worrying about it, because actually there's plenty of time, isn't there, David? I think there's an awful lot of work that needs to be done for some people, but equally there's a lot of information and help, and at the same time there's still plenty of time. And if anybody is finding it challenging. There's so many other firms that they can talk to as well. I think that's just the marvellous thing about this, isn't it? As you said quite rightly, the trade bodies and certainly the Equity Release Council in this part of the industry, the things that you're doing at Knight Frank, people talk to each other, and I find that really quite something that even now, that competition between firms, the barriers come down when people really need to help each other. I think that's a marvellous aspect of what we're doing.
We're all on the same journey at the end of the day. We may as well help each other get there, and it can only be a good thing for our customers.
Very much so.
So can you give us your views on what it is that the industry actually needs to do to implement consumer duty and stay compliant going forwards?
So I think from my own practical point of view, I think there's an awful lot of learning that can be taken from what the consumer duty and the essence of the consumer duty is all about. So for advice firms to understand within their processes where there are gaps in that knowledge for their advisors, and whether those advisors need to update their skills, sharpen their skills a little bit more, making sure that they are covering off the foreseeable harm aspect of consumer duty and ensuring that actually they conform to any compliance changes that might be put into place, so they understand that they can fulfill those gaps and ensure that the advisors and clients remain safe throughout. So for instance, over the weekend I was reading some stuff on implementation of consumer duty and making sure that that advisors were at the pinnacle of their knowledge, if you like, and making sure that they're doing the right thing. And part of it is that actually they're probably going to do too much. So there's a problem there where actually jargon and technical conversations will happen where it's almost too much for the client to take in. And almost to a certain extent, to ensure that consumer understanding is at the forefront of all this, that they almost take a step back and make sure that their consumers do understand in a summary form what it is they're actually getting recommended to them, ensure that that understanding is there, and then document that understanding, make sure that that consumer really gets it, and almost have the technical T's and C's in an addendum to the advice process itself, making sure that it's all covered off and the client understands it. But I think that the FCA are very keen on this to ensure that actually like an executive summary, whether it's written or spoken, is something that clients really get. So those are a few of the things that I think the industry can be doing to remain compliant, amongst many. I mean, this is not a definitive list of things that advisors can do, but keeping things simple for clients that they understand it, but making sure that you document that understanding, I think, is critical in this process. So what are the key deadlines, David? What's coming up? Well, what sort of things have advisors got to start thinking, or firms, I should say, start thinking about those deadlines coming up?
Yeah, great question, John. I think timescales is always something that people worry about. So the next deadline under consumer duty is the 30th of April. And by then, providers in our industry, in fact, providers right across financial services, have got to make sure that they've carried out a review of their products and that they're sharing information with us as their distributors, to use the regulator's language. They've got to communicate with us their explanation, I guess, around what their target market is for the product. And they've also got to give us a bit of explanation around how they've gone about pricing, the price and the value of the product itself. I think that's a really important deadline for us as advisors, because it's going to give us a very clear steer from the providers in terms of the market that they're going after. I think we all know what that market looks like, but it's going to be useful to hear it from them. But also how they've arrived at the pricing of their products, how they've decided that it is fair value to the customer in the current market climate. So that's the first deadline. Then really the only other deadline that we all need to worry about is the 31st of July, by which we've got to have implemented any changes that we're making for consumer duty. So those are the key timings, really.
Definitely. And it's very important to get that understanding, isn't it, of what the target market is, because the consumer duty really wants to understand, that there's no bias between one product and another in particular consumer groups and that sort of thing. So I think that's really sort of worthwhile, isn't it, to understand when that is and how that's portrayed, and give you the wording around what that looks like. So that's ideal.
And I think as an industry, we've got a bit of a challenge on our hands around demonstrating what fair value actually means. There's been a lot of discussion around this, and I think, I don't think anybody's quite found the answer yet, but I think it's really important that we as an industry and as individual firms explore what we see as fair value for the service that we're providing.
What really is good about that exploration is actually we're getting to look inwardly at these things, because initially it was kind of, well, tell us what fair value is, but actually when you analyse it yourself, you start to understand it better, don't you? I think that's asked a very vitally important question for our industry going forward.
Yeah, I've always thought of it as, in terms of fair value, I've always thought of it as, would I be comfortable with my parents paying for a particular service or being recommended a particular product? Would that feel like good value to me? John, can I ask you a question around consumer understanding? It's one of the 4 outcomes that the FCA have asked us to look at. So what is it that firms can be doing to make the products, make the services, make the advice easier for customers to understand?
That's a really good question. I actually just love this conversation piece with advisors and consumers, and that understanding point where those conversations are happening, because consumers are very, very keen. If they don't understand something, they don't want to embarrass themselves, and advisors need to read the signs and be able to understand what that looks like when it comes to those communications. And equally, on written communications, we know the FCA have published an awful lot of information recently about the financial reading ages of the public in the United Kingdom, and actually it's not at the best standard we would have hoped for. Therefore, it is actually an advisor's responsibility to help educate the public, but by doing so in a technical role to avoid the jargon that we are so well known for. And once you start avoiding that jargon and putting it in real terms for customers, and they can actually I think a test of this, the granny test, if you like, and if you can make sure that your granny can understand it, and if you don't think you're getting that across, then look for colleagues who are really good at doing this. Maybe go and observe other people in the field having these conversations with people, and learn to get that information across in a really succinct but informative way. Educate your clients. That's what it's all about.
It's interesting you could say that. So as one of the steps we've taken in terms of reviewing our communication is we've actually tried to simplify it in a way that, and this isn't being rude to our customers anyway, but we've looked at it. Could it be understood if an 11-year-old were to read it? That's the sort of approach that we're taking, to keep it nice and plain English, avoid the jargon, make sure that it's explained simply and easily.
I think that's a really good point. The 11-year-old analogy, and we know that education in schools for financial services is poor. It's not as good as we'd like it to be. There's certain fundamental stuff that isn't taught in school. It's on the curriculum, but it's not as widely known. But imagine your parents or your grandparents' generation and what education was available when they were growing up. It just didn't exist. Yeah. And therefore they learned from their parents and so on and so forth, but that was a probably limited amount of information that they got at that point. So David, just recently AIR have been running a series of consumer duty webinars, and obviously I'm sure there's been a huge number of questions that have come up from that. Advisors are not shy of coming forward with a few questions, are they? So no. What sort of questions and themes have you seen in those questions coming through to you? Have you seen any of those?
Yes, well, yeah, I was on one such webinar just shortly before Christmas, actually. One of the themes that came out of that is this idea of breaking out of the equity release silo. How do firms go about doing that? What does that actually mean? And I think for me, I've been quite fortunate. When I set up the Later Life Finance service here, we deliberately took the step to make sure we can give advice across the full range of mortgage borrowing options. So it's not just about equity release, it's looking at retirement interest-only mortgages, looking at the growing number of retirement mortgages, also looking at the mainstream mortgage market, because an increasing number of lenders are expanding their criteria to allow for older borrowers. So I think if advisors are worried about that, it's a case of looking at the broader mortgage market. Don't be scared of it. It's been there for a long time, and there are other mortgage brokers, other mortgage advisors, Perhaps if you're a member of a network or you're an appointed rep, you can talk to your principal firm, you can talk to others in the network and understand what broadening your advice base actually looks like. So that's one of the key themes. The other that's come up is how do firms go about securing referral partners? And by that I mean not partners that are going to refer into them as advisors, but actually going the other way. And I think what Consumer Duty is looking to us to do as advisors is make sure that we make the client aware of some of the broader implications, even if there are areas that we can't advise on. For example, an obvious one in our space is things like wills, LPAs, thinking about care. So as advisors, we need to make sure that we've got professionals who have the expertise in those areas that we can refer our clients to, and we can be confident in making those referrals. And I think it's about making those professional connections, perhaps even formalising those arrangements with other firms so that there's a clean flow of information, and really making sure that we've thought about the client's broader objectives, and if they've got another need somewhere else, we have a route through which they can go and get further advice from the right professional.
I think that was an interesting point that I'd seen as well in some of the things that I've been working on in different webinars and what have you, and on Consumer Duty. And this, again, referring back to the avoiding foreseeable harm, feeds nicely into this, because not doing anything about it is as harmful as actually giving the wrong advice in those circumstances. So actually having a good, first of all, fundamental understanding of something wider outside of your advice remit. So understanding, actually where your shortfalls are, but having a broad enough understanding to say, well, actually you need advice in this area or that area, and then having a route through to that particular advice area. Just so vital in this. I mean, it just makes so much sense. And actually something we've been striving for as an industry for a long time, actually, and there's always that worry about handing a client over to somebody else and that sort of thing, but having a really formal process between firms. I know this is likely to be easier for larger firms than smaller firms, but actually there are links out there, I guess.
Yeah, I don't think it's necessarily easier for the large firms. I think, for the small firms or the individual advisors, for example, if they need a referral route for broader financial advice, investment and pension advice, then why not connect with a local IFA? And they may well be looking for the same connection coming the other way in their Consumer Duty implementation. Why not connect with a local law firm in terms of wills and LPAs? Because again, they might be thinking along the same lines. They need to expand their service. So shouldn't be too hard to do.
No, but in fairness, it actually gives everybody a broader opportunity, doesn't it? When you think about broadening out what we can do for each of our clients, there is there's that expansion of your business without the issues that advisors have that keep them up at night, the worry that they're not doing the full service for that customer. I think this is actually just those two aspects alone, you should be thankful really that actually we can do something about this going forward, which I think is a great thing.
Thanks, John. So I think that brings us to the end of this section. If you're a small firm or an individual advisor who's still worried about implementing Consumer Duty, don't worry. There is plenty of help out there. For example, if you're an appointed rep of a firm, speak to your principal firm. I'm sure they'll have some resources available. If you're in a network, talk to the network. They are bound to have some help for you. And you can also look at the trade bodies. Most of them have published now some guides to implementing Consumer Duty that you can look at. So thanks everyone for listening. Do have a think about where you are, where you need to get to under Consumer Duty. And I'm going to hand back now to Stuart in the studio.